It's Wednesday, March 12th, and I'm David Song, currency analyst with Daily FX, here to discuss the Reserve Bank of New Zealand interest rate decision that's on tap for 1600 Eastern. And of course, RBNZ widely expected to start normalizing monetary policy in March. However, we do have Governor Graham Wheeler speaking following the interest rate decision, so we'll continue to monitor the headlines. But guys, here's three scenarios that I potentially see panning out, especially for the RBNZ. So of course, lots of expectations, and maybe it's already being priced into the Kiwi, but nevertheless, we are expecting a 25 basis point rate hike. However, we'll watch the language, see if we can get anything more meaningful in terms of the policy outlook. And again, the least bullish scenario that I see, if we only get a 25 basis point rate hike and RBNZ comes out, says this is a one-off event, that again could potentially lead an initial spike in the Kiwi, but again, might see limited follow through if you don't see that willingness from the RBNZ to continually normalize monetary policy over the coming months. What's sort of in the middle is maybe we could see a bigger than expected interest rate hike, maybe about 50 basis points. And again, if we do see very little language that they will continue to press on with further rate hikes, might limit the initial reaction there. But the most bullish case that I see for the Kiwi is if we get a nice rate hike there, and along with commentary suggesting that we'll see a series of rate increases over the coming months. So again, that's what we'll look for again in terms of the RBNZ, even beyond interest rate expectations or the interest rate hike itself. We'll see what the policy outlook will hold. And again, I think we're going to need that commentary of further rate increases going forward for us to see a meaningful break in the Kiwi dollar. So let's look at the chart right now, guys. And before we dig into some of the levels, I just want to show the longer term picture here for the Kiwi dollar, as it still remains stuck within this very long term wedge, triangle formation, whatever you want to call it. So again, that's what I'll look for today. If we get the most bullish scenario where we get that rate hike, and again, this forward guidance, if you will, that we'll see further normalization in the interest rate outlook going forward, guys. That's where we'll look at resistance right now, 85.40, 85.50 zone. But again, if we get a nice topside breakthrough trendline resistance there, dating all the way back to 2011, then we'll look all the way up here at 86.30, 86.40 region. To the downside, though, it seems as though for now, former resistance right around that 84.30, 84.40 region, holding up as support for now. So ahead of the RBNZ, we might see this sort of tight range continue before we get into the event risk itself. However, another pair that I'm going to watch for the interest rate decision is going to be the Aussie Kiwi, right? One of my trades of the year. However, one thing that was very meaningful that really occurred yesterday was this break in the relative strength index, no longer within this bullish momentum. So we'll continue to watch the downside. And again, a level that comes into play, 105.30, might see that if we do get a nice rate hike from the RBNZ. But few levels to the downside that I'm watching, 104 handle, even down into 102.70, 102.60 region. However, as we're still taking a longer term view on this, guys, the only key level from here that I'm going to pay very close attention to, and I'm going to have to scroll all the way back to 2005 is going to be that low that we set just right around that 104 mark. However, guys, one thing that we're looking for is fresh record lows in this exchange rate over the course of the year, especially given the deviation in the policy outlook. So with that, guys, one thing I'm a little bit concerned about, or some dynamics that we could see for the Aussie Kiwi down the road, is should we see fresh record lows? I'm sure maybe even the retail crowd might look at that as an opportunity to get long. But again, with the policy outlook, we'll stick with our bearish bias here. And of course, with the fundamentals in play, I still continue to favor the downside for this pair. And again, we'll continue to watch some of these key levels coming back into play for the Aussie Kiwi as well. But right now, again, guys, looks as though even for this pair, for more support right around that 107.40, 107.50 region. Looks like that's going to hold up as resistance for now. Looks as though we have another lower high in place. So from here, guys, I think we could be well on our way to some fresh lows for the Aussie Kiwi exchange rate. So guys, remember the three scenarios that we'll be looking for in terms of the RBNZ. And again, we'll have to look for follow through behind the initial reaction. And again, we'll be watching some of the key patterns, the long-term patterns that we're watching for the Kiwi dollar as well. But on that, guys, again, ahead of the event risk, just stay prudent. And as always, good luck on your trades.